Oof, I've got my passion fruit tea out and I'm ready to go. Do not mess with Charlie when he has his passion fruit. Okay, so after another week that saw the S&P 500 break into new all-time highs, as CNBC and Goldman Sachs reports that investors are once again increasing their risk appetite and closing out shorts, as Mr. Money Printer Powell himself says the economy is about to grow much quicker due to vaccinations and fiscal support, as Bitcoin, glorious Bitcoin, hovers into that $60,000 range over the weekend, and of course as dogs run around without leashes. Well, with all of this, especially the dogs running around without leashes, you may be asking, just what are the top 3 stocks for this week, Charlie? Well, of course, folks, in this video, we must talk about the top 3 stocks for this week. But first, I want to go ahead and recap some of our plays from last week. Okay, so last week we talked about CRWD, CrowdStrike. This was our cybersecurity play, and it continued its rally last week. Look, folks, I know these runs aren't big and flashy, but these are some of the biggest plays for stabilizing your trading. Look, folks, technology is simply going to be taking over more and more of our lives. So you best be betting that we need some damn security. With CrowdStrike, we can profit off it. Okay, next, folks, Mara, lovely Mara. Bitcoin miner Mara had a nice cool off from all-time highs. And like I said earlier, Bitcoin had a nice bounce over the weekend, holding above 60,000. Fairly nicely, and that's despite it having that as a resistance level for quite a long time. And that does suggest that Mara may have a good start to the week. But Bitcoin as a whole, folks, has been uncomfortably stable. Despite it having a history of either trending up rapidly or downtrending rapidly, it's been in the same general area basically since early March. And that's likely because of institutional adoptions and overall trust in Bitcoin growing higher, creating a strong resiliency. And I think that in the short term, it's a bit of a wash where Bitcoin's going to go. You could definitely see another buying opportunity with another dip in the next couple of weeks, but we could also see some more institutions adopt Bitcoin and get more rallying. It's just impossible to say at this point. Bitcoin is basically doing something that we've never seen it do before. Be stable. It's really difficult to see when that trend's going to break and which way that's going to be. But over the long term, I expect Bitcoin to really do well. And with that, I would look at any dip in Bitcoin miner Mara or in Bitcoin itself as a huge buying opportunity. Okay, what else do we have to talk about? Pretty much recapped a lot on Friday, but the other one I guess we should talk about is ChargePoint. So ChargePoint last week, we said if we can get this under $25, this would be a good time to snap it up, especially since the Biden infrastructure program would be a potential windfall for EV charging stations. But unfortunately, we just didn't get that buying opportunity. However, we are getting pretty close, and if this hit $25 or under this week, I see that as a pretty damn good deal. Okay, folks, so that is it with the recaps. Now it's time to get to work, and the only thing I ask of you in return is that you go and drink a little bit of tea, and then go and hit that ravishing like button. And also don't forget to subscribe. Also, quick plug if you're wondering what broker, Charlie, to trade these stocks on, well, we always like to send new traders over to Webull. They have extremely useful scanning tools such as pre-market and after-hours runners, upcoming earnings and IPOs, as well as some more tools that just frankly make trading easier. And they will, of course, give you some free stocks if you both sign up and deposit with our link below, so check them out if you are interested. Okay, so let's get to work. So first, Rite Aid. So for context, this was one of our plays last year. It got overbeaten down on earnings to $10. We said that that was likely going to be a huge overreaction. We got made fun of for a few weeks because it went down more, but then it ended up going all the way back to $32. Lots of folks locked in profits on the way up and had a damn great play. But now it is many months later and it's trading back at $20. But the reason that Rite Aid is relevant right now is because they have earnings coming out on Thursday. And just 2 weeks ago, they reported bleak Q4 data due to supply chain issues caused by unfavorable weather. Bad sales due to the fact that COVID-19 safety measures have also led to a reduction of cough, cold, and flu cases, and that's caused them to not be so hot. But here's the thing. Rite Aid has been selected as a provider of the COVID vaccines in a majority of states across the US. They've also been gaining revenue from a rise in pharmacy sales, robust online performance, and the expansion of services to their customers, which is important because, of course, Rite Aid has a reputation of being old school. But here's the thing, I hated Rite Aid pre-pandemic, but the pandemic has forced it to adapt to 21st century technology in order to survive. At-home delivery, telehealth, zero cost for deliveries, all things that Rite Aid needs to push forward in 2021 and beyond. And despite cold and flu sales being pretty damn bad in fall 2020, that's just because of COVID prevention measures. As the reopening continues and COVID-19 safety measures go down dramatically, people stop wearing masks, people stop washing their hands, which you should still wash your hands, folks. But once all these safety measures go away, well, then we're going to see a lot of traditional cold and flu cases start booming again. And that means that that revenue stream for Rite Aid is going to come booming back. And not to mention that those cold and flu products happen to be the biggest cash cows for Rite Aid in the first place. And while COVID has provided its own opportunities for stores like Rite Aid, it also has drastically elevated expenses for Rite Aid. So not exactly something that Rite Aid needs to have. And as we leave the pandemic, people are going to be going to Rite Aid, getting their vaccines, and they're going to be reminded that, hey, Rite Aid is still a player for your healthcare needs. That being said, do I like it at $20? Well, I don't love it. In fact, the best outcome that I want this week is Rite Aid getting beat down a little bit more. Maybe their earnings are bad and we get it beat down to 18, maybe 17. That would be the ideal entry point. Am I being picky? Am I being cheap? Yeah, I'm being a little bit picky. But I want this cheap, folks. A huge component of being a good trader is just not overpaying for things. Don't be too impatient, folks. Okay, next, the stock that you probably haven't heard of before, PLTR. So on April 14th, which is this Wednesday, Palantir will be doing their double-click demo event. This will showcase how their platform is used across 40 different industries and is the first big publicity date for Palantir in months, which is important because nothing has really managed to budge their share price in a while. Now, of course, a big determiner of whether this actually has an effect on Palantir's share price is whether it gets media coverage. In the past, the media hasn't wanted to cover PLTR. If the analysts start speculating and putting out articles and media pieces giving exposure to how PLTR is working with so many different types of companies, you can expect a lot more volume to flow to the stock. And we've seen that happen before. But to me, of course, the question isn't so much is PLTR valuable, but rather what is it that's going to make the rest of the market take note that it is indeed valuable? And DoubleClick can very well serve that purpose. If you've established yourself in this play, I would be patient. If you aren't already in it, there's a chance that this is the last opportunity you have to get in the below $25 range. If you want to see my complete breakdown of PLTR and the opportunity we have this week, go ahead and watch my Palantir video. I'll link to that below. Okay, next, Baba Go Sheep Baba. Now, this has been an incredibly popular play of ours in the past. We've had this as a dip buy on the channel numerous times, and it's given so many opportunities to ride out its uptrends, and this has historically been one of our most popular plays to dip buy. However, it's been undervalued for months this time. They've been dealing with China monopoly crackdowns, and the tech sell-off in February just made it much worse. For weeks and really months, investors have been discouraged from buying Baba, pending the conclusion of the Chinese crackdown. But now we have finally had a conclusion, so that's a good step. Just a bit ago, they announced that China has finally concluded that they will be fining them this amount for anti-monopoly activity. This is amongst China's crackdown on a lot of big tech companies. However, again, don't forget that Alibaba was kept down specifically because people were scared. They were scared of what China was going to do to them. And over the next couple of days, you are going to hear how this fine is going to destroy Alibaba, as of course the media tries to get their clicks. Then after that, people are going to start realizing that this fine is the equivalent of 4% of Alibaba's sales in China alone in 2019, or less than 1% of its market cap. In fact, Alibaba has dropped over 30%. Over fears of a crackdown that resulted in a fine that's less than 1% of the market cap. And yes, obviously the fact that Alibaba can't expand into a lot of other sectors is also a negative thing. But still, Baba is going to follow the new guidelines, and while I'm not a fan of Chinese policies or the Chinese government, it is a huge mistake to discount plays in such a big economy. Alibaba is the second largest company by market cap in China, and China is the second largest economy in the world with a market cap of 20.6 trillion estimated in 2024. Just a bit short of the US's 25.3 trillion in 2024. Now, would I want to have overexposure to Chinese plays? Absolutely not. But there's a lot of opportunity in international markets, and I want to take advantage. Baba Go Sheep Baba has delivered us many wins in the past, and will continue to deliver us wins. Anyways, folks, if you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade, would like access to our daily morning briefings, and of course our price targets list, I'll go ahead and put the link to ZipTrader U below. If you're wondering what broker to trade these stocks on, well, Webull will give you some free stocks if you sign up and deposit with our link below as well. They are a fantastico broker for new and intermediate to advanced traders alike. There's tons of great scanning tools, great resources for doing your due diligence, and of course they are commission free. So lots of things to consider if you're looking to join a new broker. Anyways, folks, have a great day, and I'll see you in the next video.